What's going on, everyone? All right, so today is our Friday trade recap, and the date is March 21st, 2025. So, I had a losing day. But it should have been a winning day. I made one little mistake this week. So, this week is the first losing week I've had since the last week of January. I've had 7 straight weeks in the green, and then this was my first losing week, which it happens, right? If you watched any of my last trade recaps, I mentioned I average around a 60% win rate. At the time, I think I was like 75% or so. So I have to mentally prepare myself that, hey, I could be getting a loss at some point. If I end the month at 75%, even better. But I have to know a loss can and probably, because we're playing probabilities, will come. So let's dive into what happened today. This is CPI or FOMC week. Those are all 3 days I don't like to trade. But anyways, FOMC week. So, it's a little rough. If you look out there on social media, it's a little rough for a lot of people. But let's start here. We're on the daily chart. All right. Look at this. Ooh, we have some consolidation, accumulation, whatever you want to call it. All right. Look where we stopped at today. Let's just check this out for Friday. Equal lows right here. All right. Keep that in mind. 604.25 going into next week. Sunday night next week. But before then, I was looking at yesterday's high and low here. We do have last week's high and low here. Okay. That's marked out. Now I was looking at these relatively equal lows down here. And I was looking at these relatively equal highs up here. We need to basically break out of one of those areas. Like, get out of there. So we have this fair value gap here that we did invert, but since then we've still been kind of in this area. If I zoom out a little more, because the contract rollover, it's kind of scattered like this, but we had some lows back here I was looking at as well. But let's just focus over here for now. All right. So then what I did is I dropped into my 1 hour chart. Okay. Dropped in it. And so that was the daily. Where are we at here? I was looking at this potential where we could create this fair value gap right here. And we did. So that's a 1 hour fair value gap. And that's when we came and made this low. We were under previous day low right in here. So I was thinking, okay, we might be able to take this low, and we had a 1 hour fair value gap over here. We might be able to reach down into this higher time frame imbalance right here. And if we keep going, then I'm looking lower. Because on the buy side, I was looking at it as we pretty much right here, we took all this buy side, we traded pretty well. Right? Except for where? Right in here. Okay, on the 1 hour. Right in here. So then let's drop to the 15-minute. Here's where we had before this 1 hour right here, this pink one, before that was created, we had this 15-minute fair value gap right here before the open. This is 8:30, right? So, and then we had, all these highs up here, right? All these highs, but it was fairly clean. We had this gap here where you see where the bodies close halfway point. So I was looking at it like, yeah, we could go up, but I think I want to wait and see right here after the open. I want to see if we take this, sell side area, sweep previous day low. I want to see if we're going to pull up into this 15-minute fair value gap and if we're going to displace and continue lower, or if this doesn't hold. Like, what do we do here in this area? That's what I was looking at for the morning. Okay. So I just want to kind of like lay that out right now, right quick. And then I was also looking at right here, this opening of this candle as an order block. And you can see we did reach up to it and then we sold off from there. But let me bring over this chart. So I wanted to show you that on this chart. That's pretty clean. Now let me bring over the chart that I traded on real quick, where you can see my execution. All right, here we go. Let's bring this over. Let's full screen it. Okay, so here's the morning. I'm looking at this bit of a sell-off here, right? We're going down, going down, going down. I'm like, oh, okay. Let's see when we pull up. We had that little daily swing low here that we took by a couple ticks. I had a bit of a sell side liquidity marked here, and then you kind of can't really see it. But we did have a big opening range gap. Let's see if I can go here. Here we go. Right here was our... One second. Let's get back. There we go. Right here was this big opening range gap right here. It was like a few hundred points from here down to here. So when it's that big, there's a chance that it pulls up to the lower quadrant or the lower half and continues. So I was looking at it like, okay, that might line up with a little bit of what I'm seeing. So now I'm going to go back to this 1 minute chart here. So now this is what I'm looking at. Sell off, sell off, sell off, sell off, sell off. And here's this green shaded is that 15-minute fair value gap we had at 8:30. And then we stopped here, right? We stopped here, came up. Here's our open, shot up at the open, came back, failed to make a lower low. And then we displaced up with our first presented fair value gap. Now I was thinking to myself, first of all, when we came up here, I already expected price trade up here. I told myself this would be a really good long from right here up to the low here, which, I mean, if you took that, we're looking at 56, depending on where you take profit and get in, 56 points. That's about what, I mean, that's what I look for in a trade, between 35 to 60 points. I could have taken that, but the entry was at, let's see, 945. I like to start looking for an entry after 950. But because my underlying bias was more bearish, I really wanted to wait and see what we did in here and then look for a short to continue down. But because I was looking up here, I said, this is likely to hit here and go up. But that's not my model, right? That's like not mine. I was watching this one big 1 minute fair value gap here. So I was really expecting it to trade up here. That's not my model. I got to stick to my model of what I look for. So we did get up there, right? We did get up there. And so from this area, I'm looking, do we get a short? Do we get a market structure shift? Do we displace? Like, do we hold some type of resistance here? And as you can see, we came up. Look where. So this right here is the midpoint of that 15-minute fair value gap right here, this dotted line. Okay. But look what we did. We shot up, came back, and the body's closed. Where? Previous day low. Closed here. Came down. We inverted this little fair value gap. That's what this yellow is, right? We came down, and then this right here is a 2-minute fair value gap that I marked. We came back up into it. I didn't want to short the 2-minute fair value gap because I was really looking to take this swing. I wanted price to take this swing right there. That's what I was looking for. So here, it did not take that swing, pulled up into that 2-minute, so I'm not going to take it. I want to know we're going to go down first. So then, since it pulled up here and created this swing, I was really looking at this swing to be taken with displacement. So from here, it did that. It shot down, came down, took this swing, and as you can see, it stopped right at this one. I really wanted it to take this one as well, but it stopped right at it. So I was like, okay, well, maybe it's just going to stop right there, and I'm going to short inside this fair value gap right here. Now, I wanted to take it to these lows. So I had my target down here. This is where the mistake comes into play. My low-hanging fruit that I take my trades, my profits, are anywhere from 35 to 60 points. If I can get anywhere in the mid-30s, and that's the low-hanging fruit, I usually take it. Today, I don't know what I was thinking. So my entry is 698.25. You can see it right there, which is right here. And if I would have taken it to this low, not quite, 698.25, and this low was right here, was about 34, 35 points. That's actually all I require for my low-hanging fruit. That's what I require. I should have taken profit there. But I was trying to take profit down here. Because we hit the first presented fair value gap here, and we came back to it, I kind of, and everything was lining up, I was like, you know what? We're probably going to go through it and just keep going down. And then also what I told myself, well, that's kind of what I was, that was my trade. All right, so let's go to the video right quick. Let's pull up the video and let me explain the rest over the video. Okay, so here's the video of me trading. And let's fast forward, fast forward, fast forward, fast forward. See, I marked that out, and you can see the time down here on the bottom right. Okay, I'm of the chart right there. You can see the market's open. Okay. Now we go up. I'm like, yeah, that would have been a good long, but that's not where I'm looking. Okay. So here, like I said, I was looking, okay, we might be displacing and going lower, but I needed it to take this swing, which it didn't happen. So waiting. Remember, patience is the key. You can't get caught up into things. If you see what you want for a trade, you take it. If not, just have patience, relax, chill. It's no big deal. All right. So now we're going, and I'm watching now. This wick that reached up, I'm watching this wick. We have an inversion. I want to measure out this wick. You see me, I'm thinking right here. Measure out the wick. I don't want to see it go back above the mean threshold of that wick. I want to see it displace now through this low. So let's see. Now this is the 2-minute chart. So you see, I'm looking at this fair value gap right here on the 2-minute that might be forming. I still needed it to go on. Here, let me back up. I went too far. But I still needed it to take this swing right here, which we did not. So now we have a 1-minute fair value gap right there that formed. We still have that inversion. So I'm waiting. Oh, no, that's the 2-minute. Sorry. I haven't marked we haven't had the 1-minute yet. So now we have this swing. So I'm watching this swing. Then we pull up. I was looking at this as a potential order block just in case, but it wasn't. So let me fast forward a little more. You see how this inversion's holding? Now that this wick reached up, didn't go higher, closed down, I'm watching the midpoint of this wick. I want to see after price comes back here. After a wick like this, I'll really like to look for displacement. At this point, I'm waiting, saying, all right, now we should displace pretty soon. As long as the midpoint of this wick holds. So as we can see, now we're taking this low. I really wanted to take this low, but now that we took this low, I'm like, okay, if we get the fair value gap, probably going to come back into it and then go down. Okay, we got the fair value gap. We took that little low. Now I'm in. Here, let me back up real quick. I hop in when we shoot up here. I'm in. Stop right above the highs. See, my target was these lows right here, which I'm like, I was looking. I almost moved my stop right here. Stop, because I was like, yeah, this is probably the low-hanging fruit. But at the time, I was like, it's really not a lot. Because see, here's what messed me up. I was kind of looking at where price was compared to here. And I was like, man, that's probably like 20 points or so. Forgetting I'm way up here and I'm already in a good profit position, right? And from here to here was like 34, 35 points. That's my little mistake where if I would have just taken the time to realize, oh, that's 35 points. It's Friday. You know, it's quad witching. Options are closing. Futures, the contracts are expiring. It's rollover. FOMC this week. Let me just grab my 35 points and I'm done. See, I didn't think of that. I was looking at, oh, we're going to go down here. I'm going to get me a really nice trade. Come on. It happens. But, those are the things. So let's fast forward a little bit here. See, look, it's shooting down. I'm in pretty decent profit position here. And it hits. Boom. I should be taking profit right now. But I was telling you see how I'm holding? I'm staying around my stop right here. Because I was telling myself, I was saying, all right, once we hit this, I may go to break even plus a little commissions. That way, in case if it does bounce off this and comes back, I won't take a loss. Now, the reason why I didn't do that is because I was pretty convinced that we're going to go lower. And what happens is if I move to break even and it does bounce and take me out and then continue, that can mess me up. Then I would tell myself, dang, if I would have just left my stop where I was supposed to, then I would have got the trade. So for me, I just leave it. I already know my risk. It's within my risk management model. It's perfectly fine if I lose. So I'd rather just take this loss than tighten when I shouldn't, because there's no reason for me to tighten. Now, unless if I took profit there. It's either take profit here or just leave it so it can go. So that's what I did. Hit there. I'm like, it's rejecting perfectly. At this point, I need it to displace down, which it did not. So I know I'm recording and I'm going to make a recap video. So I'll bring my P&L over here. And you see at some point, I was up like $6-7 grand. I'm just going to fast forward here because it's a loser. And we're testing it again. I'm like, all right, maybe this will be a bullish order block. As long as this closes here, this respects the midpoint, and now it's displaced. This could be a bearish order block. But I need it to go ahead and displace now. If it doesn't happen, then I'm dead in the water. So as you can see, it shoots up, hits the 2-minute fair value gap. And I'm like, oh, man, this is not looking good. Okay, fast forward. This bar closes, so turned this one into an inversion. And basically at this point, I'm expecting fully for this to lose unless we close back under this inversion again. If not, if this holds as an inversion, that's it. I'm going to lose. And I could cut my trade short, cut my loser, and it does come back to break even. But, if I do that and then it runs, it messes me up. So I just take the full loss. That's what's in my plan. That's what's in my risk management. You see right there, came back to profit. Could have hopped out. But I let it go. I'm either right or I'm wrong. That's what works for me. So now we're just going to fast forward it. And as you can see, right here, we just pop up, take the loss. So, and it did end up trading higher, as you see on the chart that I showed. But, that was that. Real quick, since I can't seem to get these videos too much as close to 10 minutes as I want, here's my March. I'm still at 63%. Still having a great month. This week was my first red week in the last 7. Like I said, I had 7 straight, and this is my first red week. So it's all good. I mean, the only thing that I do need to improve for the rest of this month is this average win rate and loser. Now, the reason also why it's not, because you can see I had a good win, a loss. See, my wins right now, it's because my contract, I've had to increase and decrease and mess with my contract sizing some. So that's what's kind of messing up my win-loss ratio. Now, the win rate's fine. I need my win-loss ratio to be like at 1.5 to 2. And that's because I've had to adjust some contract sizing. Because you see my winners should actually be looking like this $14,000-$15,000. That's about what my winners should look like, or more. And my losers should be around this 8 to 10. That's about, with my contract sizing, what it needs to be. But as you can see, couple smaller win days here. This smaller win day there. So it pretty much kind of kept, it basically kept it a 1-to-1 just about, which is fine because I'm at 63%, but I do need to be aware of that and, increase that. So, which all I got to do is just keep my same contract sizing. That's what will balance that out. So, but yeah, overall, good month so far. I've taken almost or about $9,000 basically out of made. I'm up 30 and I've already withdrawn 8,900. So good month. And let's see. We'll see if we can finish out next week strong. And then I'll do a monthly recap. So anyways, use the weekend to improve. Also, take time away from charts. Clear your mind. That's what I like to do. Clear my mind. Then also see if I can take a little bit of time to work on refining some stuff or whatever I need. And then come back strong on Monday and have a great week. So, all right. Thanks for joining. Glad you watched. And I hope you all have a wonderful weekend. I'll talk to everybody probably Monday. So, until then, have a great one. And as always, trade well, everybody.
Yeah.